Go ahead.
All right, let's do a recap of kind of things we already know about as far as Japan. This is a major issue here. In terms of suppliers, things like that, of course, number 1, corn buyer, number 4, soybean buyer, and number 2, wheat buyer here of our products. So this is a big deal. And contrary to some misconceptions, of course, this is not going to be bullish for us anytime in the next few weeks. This is bearish for us here. There will be some storage facilities and those type of issues impacted, but this is a bearish issue for right now. As far as ports, there are about 12 which actually take bulk shipments of grain in the Panamax-sized cargo ships, and of those, only about 2 are damaged in some way. At this point, the last talk is there have been no cancellations and no ships being diverted away from other original shipping points. So the issue right now is really on the feed demand and also the Japanese consumer demand for meat. And one thing to keep in mind as far as consumer demand for meat, obviously if you have a small portion of the population has some problems with just simply getting food, that's obviously not bullish here for food consumption. And also what they will be buying or eating are things that are in cans, those types of issues. They're not going out to restaurants. These people obviously won't be going out to restaurants and to the local street vendors as well. So on this end, this is a bearish issue. Also, as far as we've got to keep in mind, they buy this grain not to eat, but to feed their animals. And for the Japanese feed population, and we'll talk about this, we can do it right now as well. Up in the Northeast, of any animals that are up there, it is going to be a chicken issue here. And we put in the morning report, about 17% of the feed processing or feed mills are in the Northeast area. So they could have some problems on this end, not just with the feed mill side, but obviously in those chicken houses, if you can't have electricity on, you might have some problems running the augers and getting the feed to the chickens themselves. So this is a bearish issue for feed demand for right now. And as I said, also for Japanese consumer demand here. So for right now, and obviously they will be doing some buying here maybe in a few months once they get their infrastructure rebuilt and some of those issues going on here. So that's a concern we have here on this end here. So kind of combined with all the Libya news and now the Japan news, we've got some corrections going on here, obviously in corn and soybeans. We've done something like this a few weeks ago with those past corrections we've made. And here's the date we made a peak, and then we dropped there for a few days. And we can point out the last few in terms of percentage, from the peak down to the trough, down to the low end of those, of those breaks. As far as corn, like you can see by the numbers, this is not the worst break we've had based on a percentage basis, at least. We have dropped more. So far, we're on a 5-day correction for corn. And these other previous ones, they've ranged actually anywhere from a 1 to a 10-day correction. So this certainly is, in terms of the number, this is a sizable dollar or cents per bushel decline, but this is actually not out of realm compared with the previous declines. On the soybeans, the story is about the same here. In terms of correction, we've actually had the last 2 corrections were even worse than this one. So that's something to keep in mind here. We're on the 5th-day decline, as I mentioned. For soybeans, these other ones range from a 3-day decline to a 14-day decline. So in terms of corrections, this just kind of fits right in the ballgame. We're all scared. We're all panicked, and our customers are obviously scared as well. But this is not out of the ballgame to what we had in the past few times here. So I'm still going with the idea that, we're in a correction. But none of the numbers, as far as corn at least, have changed. We still have some very tight stocks to work with, and we also have concerns about planting, and secondary after that, even yield. So in terms of the correction, I still think we're going to get back up to those price levels we talked about before. Our price outlook suggests 630 on the December corn for a spring high, and I believe that was April-May peak as far as when that high would be. I don't think that's out of bounds here. We're going to have some problems here, obviously, with Japan. Maybe that's going to have to move us back on those targets. So it's obviously not going to happen in April. That's something we can keep in mind here. But as far as this goes, we should be getting back to paying attention towards planning as being a key driver here in the next few weeks. As far as the wheat, now one thing we've waited to talk about, and it actually is kind of important for us because it is a concerning issue here for us on the corn side. Wheat prices have fallen enough to where it's actually looking pretty darn cheap compared to corn. The wheat-corn spread, so wheat minus corn, there's only a 36-cent premium. in the soft red Chicago contract versus corn. And you can tell this is the tightest spread here, the smallest premium here, since obviously it goes back to June since the rally started. Well, that's just June. How about in historical times? Wheat corn spread going back, in fact, down to back to 10 years or so. In 2000, 18.75, so 18 3/4. 98, 29.5 cents, and actually had a 5-cent discount back in 1996. So this is a very, very tight number by historical terms. What's even more interesting is, and we're going to get some points which I can only explain with these type of big charts. We can't write an article and have it make any sense here. Let's just look at some charts and kind of understand this. Wheat is actually a better feed than corn. Wheat has the same energy content, but it has more protein. Therefore, wheat has about a 15% better feeding value than corn. So if you take corn price times 15%, you kind of see what the equivalent feeding value is. And for most of these times, the black line is wheat, and the blue dotted line is a projected level of what it should be priced at. For most of these times, wheat was overpriced by being according to corn. And you can see right now it's kind of changed here. We've got the black line is now below. But if you take this difference, so here we're now at a discount, and here we are at a big premium back in these years. If you just look at this difference right here, this chart right here, on a feed basis, wheat is actually tight, in fact, as tight and tighter than 1996 right now. So we said that the spread itself there were some other years, a few slides back you saw here, but in a corn feeding basis, wheat is much, much cheaper to feed right now than corn. Now, I'm not going to say this is a major problem for us just yet on the corn side. This is kind of like a minor irritant. But this is an issue which you're going to hear some more about in the next few weeks. Maybe some countries moving more into feed wheat instead of corn, those type of issues here. Here in the U.S., we just don't feed enough wheat to make it really impact corn balance sheet very much. But I've got to point out, wheat is a better feed by a far margin right now than corn. So let's kind of keep that in mind here. It is something which is a little concerning, and like I said, it's a minor irritant according to the bigger picture stuff we have. But it's something we're going to have to watch here in the coming